Hi guys. So this is the second part of the relative strength analysis series. So in the first part we have seen the basics of relative strength and how we use relative strength to identify which stock is being accumulated and distributed. In this part our focus will be on sectors. We'll be identifying the strongest sectors among the list of sectors we have, and then we'll shortlist those sectors to through RS charts to take a trade in them. So the trade aspect I'll be covering in the third part, where I'll be bringing the stock part and the sector part together, and from there on we'll have a bottom up framework within which we will select long and short trades. So in this particular video, what I'm going to show you is that in a typical market we have about 5 to 10 sectors easily. So how at any given point of time we need to filter out most of the sectors and go behind the strongest one. So this is going to be the learning point of this video, and I'll show you how easily RS actually helps you achieve this. In case you have missed out on the first part, please go and watch it, because without getting the basics straight, it will be slightly difficult to understand what I'm going to show you here. So again, we'll be focusing on a clear higher high pattern on a relative strength line, and the final confirmation as it is will come from price. So this is the I'll directly move to the charts this time. So what you see here is a relative strength line of top 500 index. I mean, even in your respective markets you might be having a very broad market index like CNX 500 or CNX 100, comprising of top 100 stocks or top 500 stocks. So what we have in this particular chart is a relative strength line. So this index and the subsequent charts that I'm going to show you are plotted against the benchmark index, and we'll be considering this point. Now hypothetically, let's assume we are here in this month, and we need to figure out which sector we would rather prefer to trade or invest. So the first question is whether this sector is underperforming or outperforming. As you can see, this sector, after being in a range, the relative strength line has now started forming consistent lower high and lower low pattern. So naturally this sector is actually underperforming. So this is the information technology sector. The time period for all these sector charts is the same. So this is the relative strength line for the information technology sector. Now if you look here, so what has happened is, after a series of lower highs and lower lows, the IT sector has finally made a higher high pattern, and it has kind of moved ahead. So if we are at this point and you are comparing the previous sector and the IT sector, it's a clear choice that we should give preference to information technology sector, right? So let us take a look at another chart. So this is one more sector chart. This is of the banking sector. So something similar we see that we saw in the broader market, that is top 500 index. So what we are seeing in this banking index as well, the structure of lower highs and lower lows is consistently being formed, and again this is a classic sign of distribution. Now purposely I haven't put up the chart of price in any of these sector charts. It's only because I want to focus on identifying a strong sector just through basic RS charts. Alright, so again this is the banking sector, and we have seen a consistent lower highs and lower lows forming here. So in case we are here, certainly we won't be picking out this sector. So up till now I've shown you three charts. First is of top 500 index, second is of information technology sector, and third one is for banking sector. So out of the three of these sectors that I've shown you, IT sector is the clear choice, right? So let us move to the next chart. So this is the real estate sector. Again the similar pattern we are seeing, the structure of lower highs and lower lows, and at each junction we are having a pivot violation. So again, if we are here, we would be avoiding this sector, because we can clearly see that there's some long-term distribution that is going on. So this sector is the infrastructure sector. Now mostly real estate and infra sector tend to move together, so it's no surprise that even infra sector is actually forming consistent lower highs and lower lows. Again, if we are at this point, it's a pretty clear choice which sector we should be avoiding. So the next sector is the energy sector. Now this is pretty interesting. Remember in the first part, I had shown a particular case study in which, for a few months, the relative strength line started going sideways, and it sort of indicated sort of accumulation going on, and then we got a confirmation from price. So something similar is happening here. While the banking, real estate, infrastructure, and the top 500 index sector is forming clear pattern of lower lows and lower highs, look at what is happening in the energy sector. So here what has happened is we have seen a sort of a free fall in terms of relative strength, but then the relative strength stops falling and starts moving sideways. So typically when you get this, certainly if you look at this energy sector chart and the chart of IT index, then clearly IT index is the choice for you because there is a clear structure of higher highs here. But in case you are you're not inclined to trade towards IT sector for some reason, then the second choice should be the energy sector, because here the clear pattern of lower lows and lower highs has been violated, and the RS is kind of in a range, giving initial signs of accumulation, of course pending price confirmation. So the next sector that we have is, this is the consumer durable sector. Now look what is happening here. While most of the sectors were actually forming a lower lows and lower highs here, the consumer durable sector is consistently forming a higher high. Now if you take this sector and you compare it with the second strongest one that we had, that is the IT sector, just see which one is better. I'll again flip the chart. This is the IT sector and this is the consumer durable sector. So this is sort of a secular trend that we have here. Even the relative strength line is showing that this sector is somehow being preferred, and in case you are somewhere in this month and you want to take a long trade or at least wait for further price confirmation, then this sector is one of the sectors that you should be in. So up till now we have seen that consumer durables is one sector that we need to pay attention to. The second sector obviously is energy sector, because we are not seeing a consistent formation of lower lows and lower highs. So this is one sign of accumulation. And another sector that we have seen is the information technology sector. This is the chart for it, right? So I hope I'm clear. So let us move to the next chart. So here we have the metal sector. Again, this is a secular distribution that is happening in this sector at this stage. So if you're somewhere here, this sector is not for you in case you want to go and plan out a long trade. The reason is at every level we are seeing a pivots violation when it comes to the relative strength line. So clearly there is some strong distribution that is going on here, and this sector becomes a strong avoid. So the next chart that I have is of the media sector. So again, this sector was going sideways, but we had a pivot violation here, and since then the sector has formed lower highs and lower lows, again which is a classic case of distribution. So what we have had is we have seen about 9 to 10 sectors, out of which the ones which I like are consumer durables. Second is the energy sector, because you can see some sort of accumulation going on here, and then the ID sector, right? So I hope my point is clear here, that we are looking for sectors to go long in which are clearly showing the pattern of higher highs on relative strength line. Again, I'll just repeat, a pattern of higher high on relative strength means that the sector or the stock is outperforming the benchmark index, right? So since our capital is always limited, we need to be in sectors and stocks which are doing extremely well. We don't need poor performers, because at end of the day our capital again is finite and we don't want our money to underperform, right? So I'll just take you to the sector metrics here. So in the introduction of this video, I said that relative strength actually helps you weed out a lot of non-performing sectors and stocks. So this is what I meant. See, we have looked at about 9 or 10 sectors, out of which we select only 2 sectors. That is what I've written here is ratio outperformance, that is relative strength outperformance vis-a-vis the benchmark index. So we've seen the top 500 index was underperforming, so we have a no here. Similarly for banking, metal, media, infra and realty. Now energy sector was sort of sideways, so there was some initial sign of accumulation, but still there was no decisive higher high pattern on relative strength, right? So that is why the two sectors that you need to focus on in case you are in this current market scenario, that would be information technology and consumption. So I hope I'm clear. Now remember, what we have done here is that we have just selected the sectors. Now it does not mean that we straight away go and take a long trade. Remember, relative strength is of limited use pending price confirmation. So again, I would repeat that in case you have not watched the part 1 of this series, go back and watch the part 1 video. Then you would realize the importance of price confirmation. I'll just put up a relative strength cycle chart for you just to make you understand, in a summary why price confirmation is important. But I hope at this stage, why relative strength is used and how it is used to weed out all the underperforming sectors. I hope that part is clear. So let's move on to the cycle of relative strength. So see, I've plotted two charts here, right? So typically what happens is, hypothetically, let's say we have selected information technology and the consumer durable sector in the previous chart, this chart. So let's say we have shortlisted these two sectors. The reason why we don't go ahead and take up a trade right away is because a relative strength cycle plays out in two ways. One is this way, that as relative strength rises for a sector, then it starts sort of coming down and then you see a distribution phase. Or what you see is, as relative strength of a sector starts to rise, then you get a sort of price consolidation or RS consolidation, and then you get a breakout. So when you are at this point in this sideways consolidation region or this point, it's very difficult to say whether you will have a continuation of a relative strength of that sector, or you will have a mean reversion, right? So this is where importance of price confirmation comes in. Now let's assume we are in this cycle and at this stage, and we know that IT and consumer durables are the sectors we need to be in, and we just use this relatively simple filter of price being above the 100-day moving average. If you see the consumer durable sector and the IT sector price starting to move below the 100-day moving average, and you start seeing violations of that, then you would know that this sort of RS sector is kind of cycle is playing out, right? On the other hand, so what will happen is, even if you're long, the price filters will set in and you will kind of exit the trade without any major drawdowns. And what will happen here is, again, if the price fluctuates around 100-day moving average and then finally you get a new breakout, then that would be a sign that this sort of RS cycle is playing out. So what you have to keep in mind is that just because a sector has high relative strength, it does not mean that you blindly go and take a trade in it. You have to wait for some cooling off period, and then you have to see whether you're getting a fresh breakout above the kind of filters that you want to have. I'm sort of a moving average person, or sometimes I trade just a higher high pattern as well. So I typically kind of use those filters, and I'll show you in the third part of this relative strength analysis series when I bring the sector and the stock concept together. So I hope I'm clear on this. Please remember, there are two kind of RS cycles that play out. One is this cycle, in which the RS ranking of a sector peaks out and then finally it goes down and a new sector comes up. And another is this period where the RS ranking just sort of consolidates for some time before it starts to move ahead. Alright, so this is why price confirmation is important. So I'll just sum up the key points for the sector series. So what we have seen is that out of the 9 sectors that we selected initially, only 2 were left, or rather only we selected the 2 sectors, IT and consumer durables, for investment and trading. So this is one of the most positive points of relative strength. We are focusing on strong stocks and strong sectors. That is why we need to narrow down our watch list. At times, if you're a relatively experienced trader, or let's say even if you've been in the market for 2-3 months, one of the major questions that we face is, how do you select from a basket of stocks just 1 or 2 stocks to trade? We have about 1,500-2,000 stocks in the market. Now you just need to take out 1 stock or 2 stocks, or let's say 3 stocks. Well, relative strength is the answer for you. If you take 100 stocks per sector, we had 900 stocks and we were down to only 200 stocks, right? because we selected only 2 sectors. So that is how you actually filter out trade, and relative strength as a tool is an excellent indicator for that. So towards the end, do remember that we need to keep this cycle chart in mind. That is, we need to make sure which RS cycle is currently playing out. Obviously, that will come with little experience, but it's not that difficult to figure out. So what we are again looking out for is price confirmation, because price confirmation is one of the best filters we have, which can actually reduce our drawdowns in case the relative strength ranking of the sector tries to revert back to mean. Alright, so that is all for this video. I'll be uploading the third and the final part pretty soon. Thanks a lot for watching again.